Hello everyone, Will Hassel here once again for my weekend review and look ahead. I have the standard Dow Jones Industrial Average spider chart, the PowerShares QQQ, that's the NASDAQ chart, and the SPY spider index chart for the S&P 500. Review on last week, we had a slew of economic data. We had some pretty shocking beats like the October home sales start, which were up 25%, the largest beat in 33 years. ADP numbers were better than expected, and GDP rose from the expected 2.8% increase to 3.4%, I believe. We also had a very good jobs number of let me see here, it was 203,000 jobs were created versus the 178,000 expected, and that's what increased us on Friday. You will notice on these charts, I'll go through each one of them, but that they all come up on Friday off of that better than expected jobs beat. For the Dow Jones, we started off with pretty high expectations for the week. We closed down for the days. All up until Friday, we had a steep decline coming off of the previous trading week where we closed down on Friday. This was mainly due to all the good economic data. Yes, as we can see here, spikes in the October home sales numbers and the ADP. We have spikes for the good news, but then we end up badly because taper talk was once again in traders' minds as we go through all the economic data, whether the Fed will taper sooner rather than later. Pretty much no one is expecting for the taper to for the Fed to taper in December, because that would throw the market in for a total loop. It looks like February to March is where people are expecting the taper, but the taper trade was definitely on this week. As you see here, better than expected numbers. That's how we get these big jumps, and then they just faded off into the gloom because people were scared that easy money is going to end more than expected. Although we did recover on Friday because people finally said, okay, this is all for real. We are going to taper, and the market is just going to continue going higher based off of the catalysts of good news. It did close above its 21, 50, and 200-day moving averages. Going on to the NASDAQ, which was the best performer out of all three indexes. It really was. It didn't have as much weird taper moves. It did, as we can see on Wednesday, did have a kind of an off taper move as it did kind of go in line with the rest of the markets, but it wasn't as extreme as the Dow or S&P. Let's just go and compare them. As we can see, it fought to go and stay on that 85-50 line a whole lot more than just the huge sinking declines that we saw on the S&P down here in the Dow. This was mainly boosted due to Apple, Tesla, Google, all the major big tech stocks that were really rallying throughout the week, mainly Apple, because as I talked about last week, people are expecting the new iPhones and the new iPad Air to really dominate the Christmas gifting season. But it did rally on Friday with all the rest of the indexes. It actually had a downward movement. Wait, my bad. It happened with all of them, just was a little bit more extreme. Actually closed below its 21-day and its 50-day moving average, but above its 200-day moving average. Kind of interesting that the 21 did close underneath the 50. Going to the S&P. S&P, once again, pretty much exactly like the Dow, closed above its 21 and 50-day moving averages. For the look ahead, we have, in terms of data, we have on Tuesday the October wholesale inventories number. The consensus estimate is 0.2% increase. The last period was 0.4% increase. On Thursday, we have November import prices with a negative 0.7% estimate, and last period was once again the same number of a negative 0.7 increase. November retail sales. This is an important number if you have any type of real retail sector, an Apple, even Google, even now because they have Motorola, any type of Michael Kors, Starbucks, anything like that. For me, Visa, if you have MasterCard, something like that. Retail sales numbers. Last period, we had an increase of 0.4%. It looks like the consensus estimate this time is a raise of 0.6%. And October business inventories, we are expecting a rise of 0.3%. Last period, it was 0.6%. And then Friday, we have November PPI, which last period was negative 0.2%, and we're expecting a rise of 0.1%. And then for news for this next week, on Tuesday, we have the Volcker Rule, which bans banks from proprietary trading. It is expected to win approval from the Federal Reserve and the SEC regulators. That's on Tuesday. If they do shut it down, we probably will see an increase in the banks. That's what really caused the banks to decline this week was the Senate and the House accepting the Volcker Rule. We will get into that as I show JPM. On Thursday, Hilton Worldwide is going to become public once again after it was taken private by, I believe, Blackstone, and it's going to be the largest hotel IPO ever, and it expects to raise $2.7 billion. So that's a very hot IPO that's going to be watched, a big real estate move, one of the largest hotel chains in the world. So if you are into some type of that, I'd probably go long Hilton as opposed to a REIT. Just because of the rising rates in terms of bonds and then the Fed tapering, I really do think that REITs are going to go down, but Hilton will probably go up. It's going to be a good trade to go and buy Hilton, so if you're already in that IPO, congratulations. If not, probably get that after it fades a little bit after its initial opening. And then on Friday we have the federal budget. The federal budget must be proposed by the Senate and House negotiators under the agreements that ended October's government shutdown. Once again, it's really frustrating right now to trade this market a little bit because we do have, on one hand, we just got past all the Fed taper, non-taper nonsense junk that had made good news bad news, but then on Friday, good news was good news again. It's really confusing for a whole lot of the individual investors out there that are trying to get into the market because I see is good news, bad news, is good news, what's going on. And I can understand why some of the people that I talk to and I get questions from, some of the kids at school that are interested in investing ask me, is right now the time to go into the market? And I say no, because of this whole taper, non-taper nonsense. But it seems we finally got that fixed up. So, but once again, after this whole, it just seems like every time we finally get some good news, bad news has to come in, especially politics, where we have the budget committee, as we all remember, during the government shutdown and in the fiscal cliff situation back in 2012, that, well, at the beginning of this year, the whole, are we going to go over the cliff or not? Now we have to go and deal with another debt ceiling. It's just, I really wish the politicians in Washington really get their act together so that our markets can be nice and calm, because right now they are really manipulating the markets in terms of making everyone scared and whatnot. So I will now move into, that was your week in advance. I will now move into some of the stocks that I have been watching throughout this week. We have Visa. This is also the main part of my portfolio besides QQQ, which I do own. I am long. We have JPM. And then we finally have AIG. AIG was probably one of the best performers this week. It did kind of go hand in hand with the market, really increased on Friday with a gain of, I think it was almost 3%. Here, let me go and check. Yeah, but 2% increase right there, and we got ever closer to that 50, that really big 50 line of support / resistance. Now it's resistance, it was support, as we see. Really broke that 45 level, opened way below it, so we got flushed out of that, way down here to almost 48, but now we're back up to 49, 52, if we can break 50 and close above 50 for a couple days, I really do think the stock's going to keep moving up. We saw that last week. We had that really nice level above 50, and it really held 50. Even then, as long as the markets pretty much stay up, we will most likely see AIG up. Still probably, it's actually a financial lagger, and it's on CNBC, Fast Money, and other various shows. You go and see people always mention AIG as being one of the best financials when it comes to the fundamentals, because it has been so undervalued recently. Because that whole earnings decline, even though they beat, but their revenues are just a little shy. Closed above its 200 and just barely closed under its 21 and 50 day. The 21 day crossing the 50, I wouldn't really make too much of that right now. No, I really wouldn't. I don't think we're going to see, since good news is now good news, I think we're really going to see it go higher along with the markets. Going into JPM, as I talked about, the Volcker rule really slammed it down this week, even on Friday. As we saw, it had an initial jump based on those good jobs numbers, but got slammed down due to the Volcker rule coming into play. I really do think proprietary trading is necessary for banks, because that can be a big gain of revenue for them, but at the same time, it's all kind of iffy. I just think as long as it can be well regulated, that it should be allowed. I don't see a reason for it not to be. I do understand why the regulators would not want it to be, because it's all banks trading for themselves and against their clients, all this stuff. But sometimes, the banks have to make money too, just not based on fees and stuff like that. I mean, they are investment banks. As we can see here on JPM, it did close above all of its major simple moving averages. Interesting though, because it kind of did use that 21 day as the 200 day as support, as resistance. As we look up, it capped, just almost hit that 200 day, hit below that 200 day right there. So it almost formed as almost like a resistance level right there. It actually did if you go and you look at the chart. But yeah, watch for the Volcker rule. Watch JPM. I'll even go Citi, which is one of the another undervalued bank as well as JPM. Closed below all of its major indexes. Goldman Sachs. As you can see, all the banks pretty much had the same chart. Goldman really using that 200 day as a line of resistance up until over here where it broke that. Looks like it just barely closed above all of its simple moving averages. So yeah, watch the Volcker rule if you own any of the banks. Regional banks, I don't think it will affect too much. It's mainly the big national banks, investment banks. Moving into Starbucks, kind of had a disappointing week. It went down along with the broader markets. Closed below 80, which really kind of upset me. We need to hold 80 in order for us to really have a sound move. I think into earnings, it's going to be very good, but looking onto the the 50-day moving average really looks pretty sound. Sentiment on stock twists, it's 95% bullish. I'm seeing a whole lot of people buying into the 82 calls as well. Just looking up on StockTwits what people are doing. 82 calls have been lighting up on fire. 80 calls. Same with AIG. The $50 calls were really lighting up there. If I go on a daily for a 12-month, we can really show what I'm talking about with that 50-day moving average. Just really using that as a support line right here, especially when we dip below that $80 range right there. Really use that as support onto the next candlestick. But yeah, I think Starbucks is going to be one of those big holiday winners. I mean, you can't go a couple days without hearing, about pumpkin spice lattes. I just learned today that they had an eggnog chai latte, which sounds really interesting because I love their eggnog lattes, love their gingerbread lattes. Just checking on my time right there. But I really do think that they are going to be a huge winner of this retail number of this retail season. They do kind of perform much like a retailer, even though they are a drink business. So retail number should affect them just a little bit, because it's the whole cash on hand, what people are willing to spend, are they spending type thing. Here we go into Visa. Had a really kind of an interesting choppy move. It was brought down here for some. I couldn't really find a reason. I really couldn't. A huge move down. I think it might have been profit takings or massive profit taking something. I don't know. I remember Monday morning looking at it and just killing myself, because I would have had a pretty good day if it wasn't for Visa. But it became really choppy throughout the whole 202 number. Had a nice spike up on Friday, but closed above the 202 line. That 202 line is really using support and resistance if you look at the chart. It's just trading all along that line. People are kind of getting a little scared. I think good retail numbers should boost this quite a bit. Closed below its 200-day moving average, and that's just about it. I think it should rally into next week. Hopefully we can get up to 204, would hopefully be a reasonable gain, because we did hit 52-week highs the previous week. So it's not that bad in terms of a drop here. I'll go and check the percentage off of its 52-week high. It's just 2.24% off of its 52-week high, so not a huge decline, but still a decline nonetheless. Coors, oh my god, Coors. Had a huge drop on Friday for almost no news, lack of a better term. I think it just kind of got sucked into the whole retail numbers that weren't playing along. No one really knows why there is a really no one knows why there is a decline. They have good margins. I'm looking on stock puts right now. I'm looking just for the sentiment. 92 bullish, 8% bearish. Really, I don't see it. Everyone's just been talking about buying the dips, really, because I think it's going to knock it out of the park on retail for this year. Everyone I know has been buying Michael Kors like there's no tomorrow. All the girls at my school have Michael Kors boots or Michael Kors handbag, this and that, Michael Kors this and that. And definitely when I was out shopping on Black Friday, I did notice people buying Michael Kors, people with Michael Kors handbags, really becoming really popular, along with Tory Burch. You could go and see a huge Tory Burch becoming an IPO, buy that one. But in terms of Michael Kors, retail numbers going to be really important for Michael Kors. So definitely pay attention to that. We're going to need it to close above to be above 80 to really make another move forward, as we can see over here, $80 line. Just slight dips, then it hits back to 80. People really do love buying the dips on Michael Kors, because everyone does expect it to do really well. It closed just above its 21-day and 50-day moving average and closed below its 200-day. Once again, that big drop right here, and it did close down 1.34%. It was positive on the day, a little bit on the day, but it did have a pretty big drop down in that number. Once again, no reason why. Just kind of did, and those are markets. Sometimes it just happens. So going into next week, I'd still say watch Apple. Had a pretty decent week. It had some slightly higher moves up. I think it closed just barely ahead for the week. I think it's probably going to be a very good retail winner this winter. So really buy any dips, kind of like Michael Kors. As you saw a lot of people doing that, buying the dip. Buying those dips. Just keep going up and up and up. Because once you see they're starting to have some momentum in Apple, you really can't stop it. Although the cross underneath the 200-day is a little bit concerning, and the fact that it is below some of its trailing some of its other indicators by by like $1 or so. I'll break it down to the other chart. Yeah, this line seems to be a little bit of importance. Definitely the 50, the 550 line. I've been seeing. Let me look up on StockTwit, see what the consensus is. I know there's been a lot of talk about some people are starting to get very skeptical about Apple. Sentiment's 93% bullish. China Mobile deal did come in. That's why I saw that huge jump. It was kind of interesting though. It had this nice big pop for the China Mobile deal, but then people were kind of like, you know what? Okay, yeah, we almost expected this, and it really didn't seem to be that big of a deal for most investors, other than like a 1.3% pop. But I think it'll do well in the holiday resale. My suggestion of Nordstrom's JWN did get hammered this week, as it is well below its 200-day moving average. Just looking up what it is, people are expecting good pops. It looks like it's going to be pricing off some senior notes here. Here in a little bit. It should have some pretty good earnings here into the holiday season. As I'm looking at it, it looks like it should have some pretty good numbers into the holiday season, because it is a holder of Michael Kors and all those other very trendy brands. Tory Burch, Coach, I don't think is going to do too well. It is slightly below its 21-day, well below its 200-day, so cross up at 61 I think would be a good area there. But it does have a pretty good downtrend going on. I would be cautious of this name a little bit, but I do think that they will do good through this holiday season. Oh, and another thing that I've been closely starting to look at, and that is gold. Because as we know, gold kind of closed pretty weak this week. It looks like it's going to get closer and closer and closer to that 20, not that 21, I think the 1200 level. And I think that's because, Bernanke and the whole taper talk, that's why bonds went up to 2.8%. There has been talk about 3% being a huge psychological number, so we do have to go and watch for that. In case we reach that, people have been saying that stocks may tank, they may go higher. It just all depends. So I really say, as we get closer and closer to that number, really watch with care. This is the DGC. That's the PowerShares DB Gold Short ETN. It is a -1. So it's just an inverse one. It's not triple leverage or anything like that. I've been watching it as a short for gold. If you don't want to just go out and buy, short gold futures or something like that, or you don't want to use the triple leverage version. If you want to play gold in short term, I say use this. And I think that will go and close us off. Thank you once again for watching all my videos, visiting my blog. You can follow me on Twitter at WillHasselWS. Please go on to the Leaders Investment Club website. Go and check all of us out over there. You can go and become a Leaders member in terms of registering onto the site. You can go and look at all of our different content on our educational platform, all of our different trading videos and stuff like that. I really recommend it. There's some great stuff out there. And any questions, please email me. I'm willhasselws@mail.com. Or, tweet me any of your questions, leave them on my blog. And thank you for watching. I'll see you guys next